Okay, I believe I am connected. Alright, yeah. Sorry, I was just trying to figure out some stuff and I'm still kind of new to all this. But anyway, so this is week 3, chapters 5 and 6 of Trading Price Action Trends. And these two chapters just talk about reversals and signal bars. And here's the references. So getting into chapter 5, where Al...
I don't see your screen.
Are you on YouTube?
No. I'm going to go to YouTube.
Yeah. I put the link in the Discord.
It just says here. Where's the link?
Go to the thread, chapter 5 and 6, and there's the link.
Hold on. I'm not good with threads yet. Threads. Book club. Hold on, I'm sorry. I see it, I'm sorry.
You're fine.
Okay, I'm there.
Okay. So, chapter 5, signal bars, reversal bars, where he just talks about reversals. And I wanted to just be very clear about what a reversal is. And essentially, it's just a bar that reverses some aspect of the prior direction, right? And then here are some examples. Talking about a 1-bar reversal here. The next chapter, he starts to talk about 2-bar reversals, but not in chapter 5. So just focus on the 1. And it's just a bar that reverses the aspect of the current trend, or the past prior bars, I should say. Now, there are characteristics, because there are a lot of bars that could be reversible bars. Like if you look at this picture down here, bar 57 could be a reversible bar of 56. Bar 56 could be a reversible bar of bar 55. So I wanted to find bars that are good characteristics and that you could actually trade off of them if you'd like. But these are the best reversal bar characteristics. In this case, it's a bull. I'm going over the bull version of it, but you just flip it for a bear. So you want an open near or below the close of a prior bar. And the reason for that is for traps. So, like if 63 right here where the arrow's pointing, it's a good bull reversal bar, but it would have been better if it dipped below 1-2 ticks of bar 62, because that would have created a bear trap. But it didn't. But it's still a good one. A lower tail, third to half the height of the bar, so we complete there. Not much overlap. It does not overlap the prior bar. It has a little bit of an overlap with the other one, but it's essentially the same height as the previous one with a much bigger body. The bar after, so the follow-through bar, is not a doji bar, which it is not. It is another strong bull bar. And the best reversal bars have a close that reverses the closes of and highs of more than 1 bar. Excuse me. I didn't have one here, but I think we end up getting to it. But yeah, and then of course you just reverse the criteria for bear bars. So trading a reversal bar. In a strong trend, I want to make sure that I have this, or like what I want to say is conveyed correctly, because in a strong trend, I don't advocate for counter trend trading. And there's better reversal patterns than just 1 bar, more reliable, which Al does go into, but I mean, you can technically make money from it. So if you're going to do it, it is best to wait for a test of an extreme, or in the exact wording Al uses is waiting for a trend line to be broken, and then a strong reversal bar to form on the test of the extreme. So here, there's a wedge with bar 1, 7, and we kind of overshoot here. So we're testing the extreme of the wedge, and then we get a nice strong bear bar, bigger body than the previous 2 bars, no tail on top, very small 1-tick tail on the bottom. I think that is probably, if you're taking 1 bar reversals, you can't get much better than that unless the bar eclipsed the past 8 bars lows. And how do you enter? Well, you take it on a stop order entry 1 tick below the low of that bar, and the reason why you do that is because these 2 criteria up here, they increase the probability of making money. They increase the probability of you making money on this trade. This is, I know I don't have the prices here, but this is actually, you can get 2-to-1 risk to reward here with bar 17. So you could say that this is a swing trade here. Never enter on a 1-minute reversal bar. Far too many fail. I don't think anybody in the room besides one person trades on the 1 minute, but I figured I'd include it just to be safe. And then here's a bull example. We're bouncing on a trend line here this whole time. Bar 12 on this particular day. Test the extreme of it once again, and there's a lot of examples of this actually. It's not just bar 12, but bar 12 is the easiest one to see. Bears cannot close below it, so the extreme was tested, and then a very strong reversal bar, bar 13, and then you just buy the close at bar 13, or you buy 1 tick above, stop 1 tick below, and then you'll make money. And then I brought this in here. So what do you not want in a reversal bar? You don't want overlapping bars because you're likely in a trading range or in the start of one. You don't want doji bars because there's usually sellers above, buyers below, so it's too likely to fail. And you don't want small reversal bars typically, because if the prior bars are big, then it's probably just a pause before continuing the trend. And I have this picture here because of the first one. You don't want overlapping bars. So some overlap is acceptable, but in this case, and I know we can see the future here, but like in this case, would you take bar 41? I think it's a reasonable entry, but it's not a reversal bar because I kind of think there's nothing to reverse. I almost think that we're probably in a trading range of some sort with the bar 33 highs, maybe even the bar 21 highs, and the bar 35 lows. Because we pretty much reclaimed it within 2 bars. But that's just my personal opinion. I think some people would call it a reversal. So moving on to chapter 6, signal bars and other types. There's a lot of signal bars that he talks about, and I have pictures for most of them. He does go over the 2-bar reversals, 3-bar reversals that are pictured here. And 2-bar reversals, the strongest moves usually begin here, which is, one second. Okay, the strongest moves usually begin here on 2-bar reversals. So what is a 2-bar reversal? Well, think about what, that's my wife. Think about what we just went over with reversal bars. Well, it's just another bar added on to it. So like this 2-bar reversal, 42, 43, or I'm sorry, it's a 2-bar reversal in, let's say, a bull trend, right, is a bull bar, and then the next bar is a bear bar at some sort of resistance. That is a 2-bar reversal. I apologize. Bar 42 and 43 are a good example here. I can make this picture bigger. 2-bar reversal, it leads to a swing move down and a tight bear channel here. A 3-bar reversal is essentially the same thing, but there's a doji or an unremarkable bar, as Al Brooks says. It's an unremarkable bar. So you have a 3-bar reversal here, bar 29, 30, 31. It's essentially the same as a 2-bar reversal, but this bar is not remarkable in any way. I'll go over the rest of these in the next slide, so I'm just going to move on. So small bars that are signal bars. You have inside bars, outside bars, and an inside, outside, inside pattern that is breakout mode. If that sounds confusing, don't worry, I have pictures, and I'm a picture person anyway. So inside bars are just bars that are their entire range, right? Their high and their low is within the previous bar, and an outside bar is just the opposite. Now it can be a high or a low below, higher or above or lower than the previous bar. Sometimes you get both, but that's not required. So in an inside outside inside pattern is just a breakout mode. If it's occurring near an area where a breakout can happen, like support or resistance. The way that Al trades these are he brackets the bar. I would personally just wait for the break and see if I can get a retest out of it for a measured move up or down. So let's look inside pattern, and they created a move up. The inside pattern is bars 1 and 2 here. We have an inside pattern, usually good for continuation, and we get a bull trend out of it. The breakout pattern, inside pattern, is bar 42, 43, and 44. So you have, I messed up my numbering here. It should be 41, 42, 43. Let me fix that. So it's 41, 42, 43. It's an inside bar of bar 40. The next bar is an outside bar of the prior bar, 41. And the next bar, I know it goes one tick above, and it's technically an outside bar, but just bear with me. I think this is like the most clear pattern that I could find of it. So I'll call it an inside bar. And essentially, this is what the pattern is. It's breakout mode, and we were at a form of support here. The other type of signal bars that you get are double tops and bottoms. I go over those so much that I'm really not going to touch on them too much, but just here's an example. Reversal bar failures. So Bulls tried a 3-bar reversal attempt here, but they failed. Bears were able to trigger the sell below bar 7. This is a fairly common thing in strong trends. Shaved bars. Very rare, but you only take them in very strong trends. And this picture is so zoomed in that tail on top looks bigger, but that tail is one tick. That is the closest bar that I could find that had no tails at all, because that's what a shaved bar is. It's just no tails on bottom or top. And exhaustion bars. So we had a bull trend, we had a bull flag and a bull trend that broke overnight in this session, and Bulls tried to trap the bears selling the opening lows, and they were able to with bar 9, but no follow through. Very exhaustion. Sellers willing to sell up here, the height of bar 7, and they ended up getting a bear trend out of it. So exhaustion bars usually happen in trends that last for 10 or more bars. Exhaustion doesn't necessarily mean major reversal, but you can expect things like two-legged pullbacks or maybe tests of prior pivots and such. Then I have some words of wisdom. I just went over this actually in that previous slide, so I won't repeat that, but sometimes bars are so tiny that they appear to be insignificant, but they can be telling you something that is very important. And if I remember right on this page, he had found that a tiny bar that had a breakout area test by like a tick, and it ended up being a very solid trade. So sometimes, even though bars can be tiny, you can't just write them off. And something that I struggle with too on trend days, especially sometimes it's just getting in, is in strong trends, most signal bars look weak, and that's one of the reasons why the trend continues. And the reason why I think he says that is because if you think about exhaustion candles, truly there's just not a lot of participation from the other side in exhaustion candles, and they're essentially climaxes or vacuums to test support or resistance, because the other side knows that they can either buy at a better price or sell at a better price. But in strong trends that are, they have tiny bars and never feels right to buy or sell, the other side thinks that too. They're like, okay, well, this shouldn't be going up or this shouldn't be going down. So I see a weak, entry bar. Let me take the other side of this trade. But the other side just keeps pushing and pushing and pushing. So yeah, something that I gotta certainly do is kind of remember that. Is that even though the signal bar looks weak, in the context of a strong trend, it's just good to just take it. With that, I think, unless you got any questions, Rancid, since you're the only one here, I think that'll be it. They are downloadable. I have them all in the Albrooks